Welcome to Bite-Sized Business, the channel where we use financial metrics and ratios to gauge a company's financial health. Today we will continue with the series on companies that get us our Christmas presents on time, and in this installment we will take a bite into FedEx, the second largest American shipping company. On today's menu is FedEx. The company was founded in 1971 in Little Rock, Arkansas, but is now headed in Memphis, Tennessee. FedEx only has three really notable acquisitions, the first being Caliber Systems, who owned Viking Trucking, RPS, and Roberts Express. These would all be rebranded into FedEx branches later during the company's reorganization in 1997. In 2004, FedEx would acquire Kinko's and rebrand it as FedEx Office. In 2015, FedEx acquired TNT, a Dutch shipping brand that UPS tried to acquire a few years previously for a greater sum, but was blocked by the EU's antitrust division. Interestingly enough, UPS sued the EU over this, saying that it was anti-competitive for UPS then, that it should have been anti-competitive for FedEx, but the suit was thrown out. Taking a look at the starters for FedEx, we can see that on the income statement in the last 12 months, the company has posted $87.6 billion in revenue. This pairs up with $10.5 billion in EBITDA and around $2 billion of net income. On the most recent quarterly report, we can see that FedEx posted assets of around $87 billion, total liabilities of $59.5 billion, leaving us with a total equity of $27.17 billion. Of this $59.5 billion in liabilities, $37.7 billion is total debt. Moving over to the cash flow statement, we can see that in the last 12 months, the company did $7.3 billion in operating cash flow, which was narrowed down to $2.6 billion in free cash flow. A large portion of this was the $3 billion of stock buybacks the company did, and around $1.3 billion in dividends over that time as well. Moving over to the Excel spreadsheet for the main course, we can see that today's company was FedEx, or Federal Express, who trades under the ticker symbol FDX in the shipping industry. Revenue came in the last 12 months of $87.6 billion. This compares to $87.7 billion in 2023 and $90 billion in 2022. EBITDA came in at $10.5 billion, which was down from $10.8 the previous year, but up from 2022. And net income came in at $4 billion, which was about even from their 2022 numbers. Total debt was sitting at $37.8 billion, assets at $86.7 billion, and liabilities at $59.5 billion. Shareholder equity came in at $27.1 billion, and free cash flow came in for the last 12 months at $2.6 billion, which is about even from 2022's numbers, but down from 2023's. Buybacks have remained strong for the company, being $3 billion in the last 12 months, $2.5 billion in 2023, and $1.5 billion in 2022. And cash dividends have remained steady, growing from $1.17 billion to $1.28 billion over the course of 2 years. Taking a look at the ratios, we can see that they have a slightly high debt to equity of 1.39, but it's relatively similar to UPS's numbers. Their debt to EBITDA is much higher than UPS's at 3.6. Their EBITDA margin is a little lower at 12%, and net profit margin also 1% lower at 5%. We can see buybacks as a percentage of free cash flow and net income are much higher than UPS. UPS hasn't done much in buybacks in the last 12 months. And revenue dropped a little less than it did on a percentage scale for UPS, or for FedEx when compared to UPS. And EBITDA actually grew for them, while FedEx has dropped by 21% year over year. And free cash flow was only down 1% over the 3 years year over year, compared to UPS's 32% a year. Taking a look at the comparisons, we can see that they have a neutral debt to equity. They're coming in at that 1.3-ish number, compared to UPS's high, but they do have a high debt to EBITDA, which is probably the more important metric. They have a neutral EBITDA margin and a low net profit margin, which is just pretty similar for this industry. And then their capital distribution rank was second out of the companies we've looked at thus far. UPS pays a much higher dividend than FedEx does. Based on these numbers, um, I'm probably going to give them a yellow light just because of that high debt to EBITDA and the low margin for net profit. I would like to have been able to give them a green light because of the neutral debt to equity, but due to the fact that their debt to EBITDA came in at around 3.6 and they're only running about a 5% net profit margin, it was kind of hard for me to want to give them a green light. Taking a look at the dessert section for capital distributions, we can see that in the last 3 years, the buybacks for Fedex were slightly higher, coming in at $7 billion when compared to UPS's $6.25 billion. And as percentage of free cash flow, again, in the last 12 months, it was 115% and 74% of net income for Fedex, which again, much higher percentage when compared to UPS. That being said, the dividends for UPS were much higher, given that what UPS pays in a year is more than what Fedex has paid over the last 3, which is pretty impressive from UPS. Dividends as a percentage of free cash flow and net income kind of flip, with Fedex being much lower than UPS, and UPS really just having similar numbers to the buyback numbers from Fedex. Looking at the total distribution, we can see Fedex distributed 2 times what, or UPS distributed 2 times what FedEx did. FedEx only came in at 10.7 billion, and UPS came in at 22.1 billion, and so that's a pretty good number out of FedEx still. Being this 34% of EBITDA over the last 3 years, and that's also going to be a little doctored, those numbers, because UPS had falling EBITDA over the last 3 years, and so realistically those numbers are a lot more similar. Just UPS saw a huge drop in that EBITDA, while FedEx didn't, and so those numbers aren't too dissimilar in reality, but the actual amount that UPS is doing is just much greater than FedEx. But both companies do return a lot back to shareholders, just in different ways, in buybacks, which will help raise the share price a little higher, versus dividends, which if you reinvest them will help you get more equity in the company. The check for FedEx is very similar to the check for UPS, which is partially that the U.S. economy is in a weird spot right now. That makes the future a little uncertain, just whether or not the growth rate is going to be at this like elevated level that we've been seeing with the inflation, because that's also been hurting some of the like expenses that they have with like the labor and the union expenses. But we could also see a drop in fuel expenses, which could end up helping the company. One of the other bigger issues that they have, which I have on screen right now, is the issue primarily out of their Memphis, Tennessee distribution location, where iPhones are getting stolen, whether they're being shipped back to Apple for the upgrade program, or whether they are being shipped to consumers from someone like AT&T. Part of the issue with this is they're being shipped in phone-sized boxes, which make it really easy for the workers to decide that the phones are phones. And so when you get hundreds of boxes a day that are all the size of an iPhone 15 or an iPhone 16, it makes it really easy to figure out what those are, and some of the less honest employees are stealing those. There's also been an issue with people following the FedEx drivers, and the theory on that is that the FedEx drivers are saying, okay, we've been told that there are supposed to be phones coming, and so they have someone follow behind them, and they steal the phones off the porch. And so that's an issue, because that means that some of these companies might be more willing to ship with a UPS or a USPS or even a DHL if they keep having issues regarding their phones actually getting delivered with FedEx. I hope you enjoyed this video, and if you did, feel free to like, comment, or subscribe. The next video in the series will be DHL, which is based out of Germany, but they do have a ton of business in the US. And following that video should be a state video on Arkansas. At the beginning of this, it's mentioned that FedEx was founded in Arkansas, but moved to, I believe it was Memphis, Tennessee. But still in Arkansas, there are some large companies, including Walmart, which is one of the largest companies in the world, and most definitely the largest company in Arkansas. Again, I hope you enjoyed this video, and thanks for watching.